is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN Wednesday afternoon. It's an important day. We got NVIDIA earnings after the bell. We got Fed minutes to digest, and we got a little bit of two-way market action right now. S&Ps were positive by 0.2%, up by 13 points, trading at 66.52. You see the acceleration early this morning. Highs just after 10 a.m., almost up to 67.10. You drive down to almost 66.20. You're talking about almost a 90-point move on the downside, but nonetheless, we're positive by 10 points in the S&Ps. NASDAQ 100, a roller coaster as well. Up by 0.3%, up 72 points at 24,668 right now. You have the Dow in the red by 0.2% or 79 points, briefly below 46,000 on a couple occasions. We're trading right now at 46,109, and the Russell off by 2. As I mentioned at the top of the market update there, crypto volatility continues, 88,670. And we're doing it with some volume. Look at the volume of some of this selling, but crypto under pressure. You have Bitcoin down by 4.6%. Ethereum, even more dramatic, down by 8% right now. Crude under pressure, off $1.45, down 2.4% at 59.21. And yields in focus today. We get some Fed minutes. We'll go over those in a moment, actually, but you got some lower price, higher yield. Yeah, not sure whether we're going to get that cut on December 10th. It's going to be a close one. The market, though, we'll go over the probabilities. They're shifting towards no cut. It used to be a 50-50 this morning. Now it's lining up at almost a 70% chance that they may stay where they are. And we got a long way to go until December 10th on that Fed meeting. But nonetheless, lower price, higher yield. The 10-year right now approaching 4.14%. And with higher yield comes dollar strength, just over 100 at 119 pennies on that dollar index. And gold holding up well. All things considered, you're up by $10 on the session right now. You got dollar strength and gold priced in dollars, holding up well, up by $10. But yes, well off the highs of today. We're up as high as 41.34. You trade lower until noon. We've bounced a bit. All right, we talk about the Fed. Fed minutes out, 2 p.m. Eastern time today. The minutes show, quote unquote, many officials lean against a December cut. To get into the verbiage, many participants suggested that under their economic outlooks, it would likely be appropriate to keep the target range unchanged for the rest of the year. Now, what does many mean? Okay. It also showed several were against lowering the Fed's benchmark rate at that gathering, talking about the October meeting. Okay. Now, several participants said another cut in December could well be appropriate if in December if the economy evolved about as they expected. Now, this is the cool part I liked here. In the specific hierarchy of so-called counting terms, right? What does many mean? What does several? Well, in Fed minutes terms, many falls below most majority, indicating that many that leaned against another cut in December were still in the minority at the time. It's going to be a close call in that December meeting. We're getting some volatility around yields. And that meeting is December 10th. And you get over to the CME FedWatch tool, okay? As of this morning, folks, this was about a 50-50. This is the December 10th meeting. And right now, the market's pricing in about a 68.4% chance, no cut. 31.6% chance that we get a cut. Remarkably, 1 month ago, the odds that we would be at 3.75 to 4, which is where we are right now, the current target range is 3.75 to 4%. A month ago, the market had that at 0.0. That number is now 68.4. It's been quite a month in terms of market expectations for yields. We're getting some volatility today, and we have those Fed minutes. All right. Now, the real main event of today, NVIDIA earnings. Yeah, you jump over to NVIDIA. Now, expectations sky high. They're announcing deals right now today. They're announcing deals in Saudi Arabia with XAI, up by 2.6%, up $4.64 for NVIDIA. We take a look at the daily. We ring the 5 trillion market valuation mark at 212.19. We don't ring it there, but we get above it on that day. You hit it again. We've been under a little bit of pressure. And yeah, all eyes on NVIDIA. We jump around to some of the other Magnificent Seven. Amazon, a little bit of a slide from the highs recently this month of 258. Amazon under pressure again today, off by 0.3. Microsoft. Yeah, Microsoft and Amazon get downgrades yesterday by one analyst. They've both been under pressure. Microsoft down another 1.6%. Meta shares. They win their antitrust suit under pressure. They win it yesterday. Down by 2% right now for Meta shares. Facing some heat. Adding to a little bit of the volatility, that December 10th Fed meeting, we're not going to get the October unemployment rate. Fed Reserve officials will head into that next meeting without fresh jobs data. Yeah, so BLS, they're not going to publish that one. And it's going to take us all the way until December 16th is when you're going to get the November jobs data. So they are dealing with light data, and that makes their job even more complicated. Does that mean they pause? Does that mean that they cut? The market, not quite sure just yet. And we will see. We've heard whether it was Waller out there. He's in the camp of cutting. He was out there yesterday talking about cuts. He's in the running to be the next Fed chair. And we're going to face some volatility coming into that meeting. And we're not even going to get the jobs data for November. It's going to take them till December 16th is when we're going to get that data. You take a look at the daily on yields. And yeah, just chopping around. We got lower price, higher yield today. The bottom of this range has been at about 112.16. We'll see where we go from there. All right, we jump around to some of the companies with earnings today. Yeah, check out this one. TJX, TJ Maxx, great company. Delivers on earnings, but you give it all up. Look at that. Give it all up on the open. And they had some good numbers. But you check out this channel line. Okay, great stock, but bumping up against the top of that channel line, and you got some selling going on today. Pretty tough when you come out with some big numbers, and you give it all up, a positive by 0.3%. You jump over to Lowe's. Yeah, up by 4.4% on their numbers. Now, Home Depot disappointed, but not for Lowe's. They're getting more of the professional services coming into Lowe's. Up by 4% right now for Lowe's. Target shares, on the flip side, down by 3.3% for Target. They're going to be spending $5 billion this year. Yeah, to improve their stores, work on inventory. This chart's a tough one, though. Look at this one, right? The trend is not your friend right now in Target shares. Target down by another 3.3%. You jump over to some of the other retailers. Walmart down by 1.2% right now. Costco down by 1%. Costco having some problems lately, breaking some lows. All right, folks, we got the S&Ps up by 19, NASDAQ 100 up by 112. Stay tuned. We're coming back with our man Elliot Wallenbach from Direction, Senior Vice President, Institutional ETF Strategist. We'll talk some ETFs. We'll talk some markets. Stay tuned, folks. We'll come right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got markets catching a little bit of a bid right now. We get some buying, but as we come into NVIDIA earnings after the bell tonight. And right now, folks, we're going to jump over to our man, Elliot Wellenbach, Senior Vice President, Institutional ETF Strategist with Direction. Folks, head on over to the front page of TFNN. You'll see those Direction banners right on the front page. To learn more about the leveraged and inverse ETFs they provide, click on those banners. And we got some cool things we're going to talk about today. And one of them going to be more single stock ETFs in this market. Elliot Wellenbach, welcome back to TFNN.
Hey, Tommy. Thanks for having me. Excited to be here. We always have some good topics every time we talk.
You ready, man? I know we're going to talk about new single stock ETFs. One of the ones you guys have already is NVIDIA. We got NVIDIA after the bell. We'll get into that. Why not? Let's kick it off with that, man. We got Fed minutes today, Elliot, but we got a lot going on, and we got NVIDIA after the bell today. Talk to me a little bit about NVIDIA. I know you guys, that's one of the single stock ETFs you guys provide, and NVIDIA, boy, it's a big day for the biggest equity in the world right now.
Oh, yeah. No, the NVIDIA has been the 800-pound gorilla in the room for the past week with the earnings today after closing bell. Right now, the options market, it's looking like a 6.5% move in either direction, approximately. And, we're going to see if, can AI ad revenue, revenue and profits really justify the spend on infrastructure, not only from the semis, but also from the mega cap tech names. And like you mentioned, we do have an AI, ETF, and we have a few semiconductor-related ETFs. We'll start really broad. We have triple leverage semiconductors, SOXL and SOXS. It's a way to trade a broad basket of semiconductor stocks. And then if you kind of filter it down a little bit, another product suite is our leveraged Titans, which is the top 5 semiconductor names. That's a newer fund family to us. TSXU, TSXD, and those are 2X ETFs. And NVIDIA's 20%. It's top 5 within the semiconductors. And then, of course, you have single stock. Great way to trade, single stock, NVIDIA, NVDU, NVDD, both leveraged. The bull side is 2X and the inverse side is 1X. So you have a variety of ways to trade NVIDIA from, concentrated single stock all the way up to, your broad semiconductor basket.
As traders, man, it is, as I say, it's a great time to be alive, but it's pretty remarkable. The products are available right now, and we have some volatility in this market, which sometimes can be a trader's best friend. and we're seeing it play out. Expectations, man. There's no way we've never had, Elliot, a company that has to live up to $5 trillion expectations before coming into earnings, and NVIDIA's just off that level, but I can't wait. I mean, it's quite a number, and they're even making deals today. I don't know if you saw. They got deals going on today with XAI in the Middle East, so the press is on, and we'll find out, but great products. We talk a little bit about jobs, and we're talking about whether it's the BLS, we got rates in focus, the Fed. Talk to me a little bit about the jobs, and as that pushes over to, of course, the economy and the market in general. When we're talking about that September jobs cut, and we're talking about now you go out to the November number that we're going to look for, Elliot, going out all the way to December. How about that one?
Yeah, no, definitely. I heard you talking about on your show, maybe 10 minutes ago about the Fed October meeting minutes, where it kind of seems that a larger majority is comfortable with keeping rates steady for the rest of 2025. But as you mentioned, we have not had really key economic data, and this Fed has been very dependent, and they've made that very clear all year that on the economic data to make their decisions, and we have had a lack of that for about the past 6 weeks. We'll have the BLS September jobs report that will come out tomorrow. Of course, that is from September. We are not going to get. I think you mentioned we won't get November's until after this Fed meeting. So, unless there's any big surprise, it seems like it's leaning more towards, just holding rates steady. And there are a few ways to trade that. We do have some Treasury-related leveraged ETFs, TMF and TMV. That's our 20-plus year Treasury 3X ETF. TMF is the bull, TMV the bear. And then we also have, if you're looking for the shorter end of the curve, the 7 to 10 year TYO and TYD. Those are both 3X ETFs as well.
And it's remarkable if you caught when I was looking at, and those swaps that I pull up, they're it's not like I say they're the holy grail, as in but just a month ago, nobody ever would have thought we would have been here in the yield market. I mean, we have, and like you said, I mean, even going out to December 10th right now, and as traders, man, that type of unknown right now, that we can go from the market pricing in something at almost a 0% probability a month ago, and now the market's pricing in it at about 70% as of today, that we're going to be right where we are as of December 10th on the rates. Pretty cool. And I referenced it at the top of the interview. You guys have some new single stock ETFs, man. I talked to my friends about it. Single stock ETFs. I think is where everything is going as traders. But please talk about new ones that you have literally launching. Is it today, Elliot, those launched, or just now, the new single stocks?
They did launch today. Great
Nice.
timing, where we have a total of 4 that launched today, live trading as of this morning at the open. And now we have over 28 single stock ETFs. The newest additions we have some crypto related ETFs. So off of Coinbase 2X, Robinhood, those tickers are CONX for Coinbase and HODU for Robinhood. And then we've expanded out our semiconductor, exposure. We launched Intel today, 2X, LINT. And then, back to the AI infrastructure and trade, we launched Oracle today. That's a bull and bear pair. So 2X on the bull side, single inverse on the bear side for Oracle. Really exciting, great ways to trade around earnings, like with NVIDIA today, or taking a directional view, either long or short on an individual stock.
Pretty cool, man. And those names in particular, boy, they're some of the famous, they're Oracle, boy, remarkable AI all the way up on their last earnings, all the way up to 345. And now we're at 226, but they are a player in AI for sure, up 2.6% today, even just the equity. And how about gold? Let's talk a little bit of gold. We got a couple minutes left. What are you guys seeing in gold? You guys got some great gold ETFs, of course, Nugget, Dust, but what are you guys seeing? Gold's quite a market, man. Holding up pretty well today with a strong dollar, above 4,000 still.
Yeah, no, gold's had, I think it's been the best year since about 1979. Right now, minus today's move, it's been, it's up about 55% on the year, which is a remarkable move for gold and the gold miners as well. And we have some leveraged ETFs that provide exposure to the miners. So no physical gold exposure, but a great proxy to trade gold. We have our 2X gold miners ETFs, Nugget and Dust. I know we've talked about that one quite a bit on the show in the past. And then we have the junior gold miners that, are the smaller cap gold miners, JNUG, JDST, both 2X leverage and inverse. Great ways to trade, again, a basket of gold miners as a proxy trade to gold. They're a great pair there.
And boy, that Nugget, and on many of those, no matter what one I'm looking at right now in this market, but Nugget from $34 up to $189, and yeah, we have some volatility in that market. Elliot, I appreciate the time as always, man. Great products from you and the team at Direction. We appreciate it. Always enjoy the conversation, and we look forward to talking to you next month, man.
Yeah, Tommy, thank you for having me. Looking forward to next time.
My pleasure. Elliot, take care. Folks, check out that Direction banner. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direction's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. S&P's up by 29 points right now. Yeah, we got a half hour until those NVIDIA earnings, and they will be after. They're not necessarily coming right at 4 o'clock, but we got the closing bell, and they are tonight. And then you're going to have the CEO, Jensen Huang. He's going to be making his circuit. I know I heard he's going to be out on Bloomberg at 6 o'clock. I'm always trying to figure out, okay, is he going to be out there celebrating? Is he going to be out there explaining? We're going to find out. Expectations, as I mentioned, Elliot, can't be much higher when you're pushing a $5 trillion valuation for that equity. And, you know, you talk about some volatility, folks, okay? This equity, almost 25 billion shares outstanding. 24.347, okay? So close to 25 billion shares outstanding. Today alone, you're at 125 billion in market cap, but 25 billion shares, and you talk about some volatility recently, okay? The move it had at the beginning of November from about 212, this was a 5-day move. From 212, which was pushing the highest valuation it had, challenging the highest of late October, down to a low. Now, that was November 3rd, middle of the day. 1, 2, 3, 4 days later, November 7th, it was trading at 178.91. Okay? So that is a move of $34 almost. Okay, and it's basically a move about $800 billion in market cap that was lost in 4 days. And then what happens is you get back $500 billion. So $800 billion of market cap down, 500 back up, 500 down. Now this company is worth $4.5 trillion right now, but it illustrates the volatility that is coming into this earnings when you can go 850 down, 500 up. And that was not a drastic news-driven event. There was selling in the market. There's risks in the market, but that was not like you had some huge revelation of a business-defining move. That was selling in an equity as the market pulled back from highs, and we're coming into their numbers. And yeah, you talk about the expectations. You're looking at about options pricing at about a $13 move after the numbers in either direction. Trading at 186, you want exposure through Friday, about a $14 move in either direction, which basically means that an at-the-money put or call going to cost you about $7. Yeah, there you are, pretty much. You're trading at 186 and change, and you're looking at about a $7 put or call. I mean, $13 of volatility, not that much when you look at how much this equity has moved. You know, the market is never on how it's pricing it, but we got almost a $6 move today alone. Prior to numbers, after the bell, priced in about $14 in terms of the type of move that might be possible. And yeah, check out those Direxion ETFs, folks. Great products. There's your single stock ETFs. And as Elliot was talking about, they're your Titans. This is just at Direxion.com for Direxion shares. And then you get over there and you can check out their leveraged and inverse, but those single stocks. Okay, you click that link. You bring it down. The new ones are right on the top here, talking about Coinbase, Oracle, Robinhood, Intel, and then you got down the list, Tesla, Apple, many great equities, and I know I'm biased. They're a sponsor, folks, okay? But as a trader, and listen, options are huge right now, but if you're trading equities and you're trading it on a very short-term basis, it's a great product to gain leverage for swing traders, short-term traders, etc. Okay, and they are daily investment vehicles, folks. The longer-term returns don't always reflect, okay, the underlying when you're dealing with leverage, because momentum matters on the way up and the way down. So they're short-term trading vehicles, okay? But as short-term traders, you come into earnings, something like this, if you're buying the equity, you can gain twice the exposure, right? Or the same amount of exposure for half of the equity price up front. And if it's something you're trading, seems like a great way to make the most of the capital that you're using. All right, we jump around to some of the other equities I talked about on their numbers. Target under pressure. And yeah, this thing. Listen, I love the Target experience. All right, I talk about it all the time. Tommy and I use it as like a Toys R Us experience, right? You can jump in there, you play some video games. I'll grab a Starbucks latte. in the summer evening when it's like 98 degrees and humid in the middle of the summer, 7:30 at night, we'll go do a little Target shopping, okay? Explore the toy section. But yeah, guess what? You know where I do most of my shopping? Walmart and Sam's, right? I half kid, but you look at those two charts, and boy, that tells that story that I might not be the only one. All right, you look at the two of them. Over the last year since that high of 2021, Walmart's just ate their business, man. Walmart, 2021, you're at $46. You drive down to $39. It's been quite a run since then. And Target, no, all they've dealt with is problems, man. Since the acceleration up to those COVID highs of 268, and you're still under pressure. And now they're going to spend $5 billion, folks. $5 billion. Let's get this one. All right, I might have to find that one at the break. No, here we go. It's going to be up here. No, it's not. All right, I'll find it because they're spending $5 billion this year. Target. It's a lot of capital expenditure for a company like this, and I think they need it longer term. But shorter term, that's going to put this equity under pressure, and you're seeing it today. The flip side of that, Lowe's. See, bounce right off that area of 220. Home Depot has their numbers this week. Tough numbers for Home Depot. You know, you're going to break everything. It's only Wednesday, folks. Home Depot's already done 21 million shares. The April lows are 27 million. This is a weekly. You get the potential to break the April lows with volume. That is very difficult to do when you're talking about the volume of the tariff lows in April. And here Home Depot is under pressure. Lowe's, what they really beat in is professional services. And that's what Home Depot usually is, and they are the leader of. But that is where Home Depot is overachieving right now. And technically speaking, you know, you're looking to get in Lowe's. That's a nice bounce. You're doing it with volume. Same deal. It's only Wednesday. You've already done 16.7 million shares. And you're trading into an area of support from 2024, around 220. And listen, we always say, it's an art, not a science, okay? You do have lows out there at 211.80. You have lows out here at 206.39 in the April low. You got lows at 210.33. But realistically, I like getting in there. You get the back against the wall a bit. You pick a stop somewhere below this level. Because you trade there, below there, where are we going? Yeah, probably heading, if you break below that 220 mark, next stop's the 382 pullback potentially, almost challenging the lows we had in 2022. But that doesn't seem to be happening. This is a good bounce. You got some volume going. Yeah, you had some big volume yesterday, and that was Home Depot. Okay, it traded lower on the heels of Home Depot disappointing, but today it says, no, we're shaking it off. You're going to trade higher with volume. Lows up by 4%. All right, folks. Markets, we're pushing higher. S&P's up by 41. NASDAQ 100 up by 220. Come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. NVIDIA up by 2.9%, up $5 and change. And yeah, you accelerate up to more than a $5 trillion market cap. You make a double top, we pull back. And where are we pulling back to? Basically, this nice consolidation. And this has been kind of an area of support or resistance. And you're looking at the area, almost 180, maybe a bit above it. But I had this area on the chart. You know, it was chopping around. Nice consolidation area all the way from the beginning of August through September. And that's the area again. And we're right there right now. And yeah, we are a solid, $26 off of the highs, which is remarkable. $26. You're talking about $600 billion and change market cap wise. But you've been pushing these levels since July. And we find out, as EKS was saying in the Tiger's Den, they're going to be pumping their numbers out at 4:20 p.m. Eastern time today. Elon's favorite number. Well, we'll see where that goes. But all eyes going to be. And then, yeah, their CEO is going to be out on Bloomberg. He's making the rounds after that. It's always interesting when you say, I would, anyway, we'll see if he's explaining or celebrating what they're coming out with. And boy, they better be celebrating, because at a $5 trillion expectation, you don't want to be explaining, right? It is supposed to be all growth. And boy, some of the deals getting done today, even in terms of Saudi Arabia, in terms of XAI. And yeah, let's talk about it. All right. That's not the one. Here we go. Now you talk a little bit in NVIDIA. And here we go. So on their earnings day, in any other world, this would be a monumental thing, right? It's like once a week now. Musk's XAI and NVIDIA data center in Saudi Arabia. 500 megawatts or enough capacity, 700,000 homes for a year. I mean, it's like every week, right? Every week. So NVIDIA likes this deal. We're coming into their numbers after the bell. And yeah. Jump over to Tesla shares today, up by 0.6% right now for Tesla. All right, some of the other news out here. Yeah, we talked the Fed. Well, let's talk a little bit of... All right, you got block accelerating. Let's talk a little bit of nuclear. So the 3 Mile Island nuclear restarted gets $1 billion loan to Constellation. But after that, you get the revelation, okay, that the U.S. government, yeah, we're going to be building 10 new reactors. All right, and there was that acceleration right there. Pushes Cameco up 3.2% right now. And Constellation was the one I first talked about, up by 5.7%. And data centers, we're only going to be constrained, as Mr. Sam Altman says, by electrons. What's going to be your constraint? Electrons. electricity powering these data centers. And yeah, 10 new nuclear power plants. So check this one out. And this comes from the Japan deal. So the U.S. is going to own nuclear reactors. And how about 10 of them? The U.S. government plans to buy and own as many as 10 new large nuclear reactors that could be paid for using Japan's $550 billion funding pledge. Pretty remarkable. The new details were outlined Wednesday. The Energy Department's chief of staff about the non-binding commitment, pay attention to that one, made by Japan in October to fund $550 billion in U.S. projects. And it looks like we're going to go for 10 nuclear power plants. It's been a decade since the U.S. last broke ground on a large-scale nuclear power plant. But yeah, it's happening, man. In all, Japan has agreed to invest some $332 billion for energy projects in the U.S., according to the White House. And yeah, well, it's Oklo, right? Kamiko. I just pulled up in Constellation, of course, off the deals that they were talking about as well. So you jump over to crude. Speaking of energy, crude's under pressure, continuing off by 2.2% right now. And you got some selling today, 313,000 contracts to the downside. Yesterday's bounce, only 277,000 contracts. I mean, you look at this trend. The trend is not your friend in crude right now. All right, just bumping up against it. And where you sit on the bottom half of that, not quite sure, but nonetheless, you got a series of lower lows, lower highs, maybe something like that. Crude under pressure, off by 2.3%. Jump back to gold. Yeah, we had quite a sell-off. As I mentioned to Elliot, you know, this is remarkable strength when you look at the run the dollar's had, folks. Okay, you check out the dollar. Watch this. Okay, this dollar. September 17th, you were at 96. Okay, we've now double topped up to 100. But September 17th, the dollar was at 96. You're up 4 solid points since September 17th. Okay? And meanwhile, there's September 17th. So in the same time frame that you've had the dollar go from 96 to 100, which is strength, normally, if the dollar's stronger, you're going to need less of those dollars to buy gold because it's a stronger currency, but gold's going up in everything right now. So even at the same time that you've had the dollar strengthen, you still need to spend more dollars for that same gold, right? So the dollar strengthens from 96 to 100, and meanwhile they still say, I would have sold you an ounce of gold on September 17th at $3,700 when the dollar was only at 96. But even with that stronger dollar, I still want 4,000. So that is not straight currency play. You got a lot of strength in gold in many currencies right now. Silver up by 0.6%, and same deal with silver. You look at where silver was back when the dollar was at 96 and change. Now that was a Fed meeting. That's September 17th. Things have changed since then. Okay, but silver's trading from $42 and change up to $50.84. You make an all-time high. Is that 6 days ago in silver? Yeah, TJX and Marshall. So big numbers today, but they give it back and just bumping up against the top portion of that channel line as we talked about. But they had big numbers, man. $1.28 versus $1.22. Revenue $15.12 billion versus $14.85. And comp sales, how about this, right? I mean, check out the expectations of some of these equities, okay? During the third quarter, comp sales for TJX were up 5%. The market was looking for 3.7. Folks, the stock's almost negative today. Yeah, look at that give up. These are strong numbers. On a guidance perspective for 2026, TJX expecting comp sales to rise 4%. The market was looking for 3.4%. It's big numbers. And the market says, yeah, we know it's big numbers. Okay? We know it's big numbers because this equity's just traded from 120 to 150 this year alone. Now, on the flip side of that, Coles. Coles under heat today, down 1.5%. That's a weekly. And there's your daily. Coles, from $18.75 a week ago, down to $15.49 right now, down 1.5. We check back in on NVIDIA, up 2.75%, up $5. One more segment, folks. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got to try to Regeneron up here. A question from one of our Tigers in the Den. EKS, and I put this thing on, so I started out on a daily, and it's been quite a run. You make a low out here, 476. That May, you accelerate lower. The last earnings, we beat. You accelerate with some volume. Now, the one thing is you're breaking above that volume on lighter volume. Right? It's very difficult when you're doing that, when you're coming into a big earnings day, but volume is still volume. My dad would say, volume is still volume, right? You're coming, you do have buying, okay? So it doesn't have to be definitive, right? You get some buying, but look at how you break above that volume and you do 1.5. Then you break above the 1.5 bar and you do 1.3. We're getting some trading today. And then on a weekly, you take a look at this thing. You got the low in acceleration. What's nice is this week from their last earnings, it's a big one, man. The only thing standing out there is the lows from June. Okay, because you're coming into all of this and you're breaking above it with volume. So yeah, I kind of like the move here. Quite the pullback last year from $1,200 to $463, but yeah, we got some action. We got some action with volume, I would say, on that one. All right, and as I was talking about Target, yeah, it's $5 billion. There it is. Investment in the next year. Just wanted to bring it. The retailer would invest about $1 billion more next year to improve stores, its merchandise selection, and digital capabilities. They got to do that. As somebody that enjoys that experience, it's waned. You know, change or get lost. As in, they got to be innovative and they got to do some spending. And they're going to do it, but guess what? Short term, market never likes that. Not for a company like Target when you're investing $5 billion, down by 2.8%, under pressure. And we'll finish it off with NVIDIA. Look at this. We're trading higher into the close. NVIDIA up by 3%. Folks, thanks so much for tuning in. Have a great night. Have a safe night. We'll see you back here at 9 o'clock tomorrow morning for the Morning Market Kickoff. Thanks so much, folks.
Building